Good afternoon, everyone. I guess we can start the presentation. First of all, thank you everyone for joining in this afternoon on Wednesday. Glad to see a lot of good amount of people joining us. And again, we are here with the next webinar, which is basically our education webinar on the product SM REITs. Today, how it's going to be run, the presentation is we have Mr. Samir Bhandari with us, our co-founder and CFO, who a main topic for today is ask me anything, right? So any particular things, questions which you have regarding SM REITs, you can start putting in the Q&A and the questions starting now. I will run through the presentation, which will hardly take in 10 minutes, not more than that, and then we'll go towards the Q&A round. Thank you. A bit about the leadership team. So have Mr. Shiv Parekh, who is the founder and CEO of hBits. He's a Harvard graduate, MBA. He's done his engineering physics from Stanford University. He comes with experience with Citi and Stanford Management Company. Just to give you a little awards and recognition, which he's got, is his Forbes Asia 30 under 30 2022, Business World Disrupt 30 under 30 2022. To talk about Mr. Samir Bhandari and CFO, he's part of this presentation. He's actually been an MD co-chair of Global Market Sales Nomura, where he's handled almost each and every product in terms of sales, equity market, fixed income. Being a Singapore citizen, he's been into the Singapore market for almost close to around 28 years. Overall, 35 years experience, worked with banks like JP Morgan, UBS, AVP at Bank of America, and of course, when he joined Lehman Brothers, which was took over by Nomura at the end. He's an IIM Ahmedabad pass out, 1987, and that is chartered accountant. Let me just run through the presentation. Something about myself, overall 25 years of experience working with banks like HDFC, HSBC, DBS Singapore, and Kotak. I was one of the first employees at hBits. To talk about SM REITs, what is an SM REITs and how is it different from a traditional REIT? Well, SM REITs, how it stands is Small and Medium Real Estate Investment Trust. It's a SEBI-approved product, professionally managed, asset-specific investment, and focuses on premium pre-lease commercial properties. How do SM REITs particularly gets compared to FDs, bonds, and debt mutual funds? Mr. Mukesh, you can always write in the question. We are not able to put the vocal voice here, so you can just put in the question as you have raised the hand. So how do SM REITs compare to FDs, bonds, and debt mutual funds? Well, in regards to SM REITs, we're talking about indicative yields of approximately 8% paid out quarterly, plus capital appreciation, which comes to IRR of around 14 to 17%. Liquidity is moderate. Taxation is rent-free, tax-free. Regulation, of course, it is regulated by SEBI, and market risk is low, and the ticket starts with 10 lakh rupees. If you look at the transparency, the due diligence and audits are pretty good. So that is why transparency level is very high. In regards to FDs, bonds, and debt mutual funds, it remains in such a fashion that it yields around 6 to 7% in FDs, 7 to 8% in bonds, and 6 to 9% in debt mutual funds. Liquidity is high among all in FDs and debt mutual funds, as you can just go and remove the particular fund, and moderate in bonds. In taxation point of view, FDs are fully taxable. Debt mutual fund indexation benefit. Tax based on type is basically bonds. Regulation, each and every instrument over here is regulated, of course, with different authorities. FD is regulated by RBI. Bonds, depending on the product and the company, it's RBI and SEBI. For debt mutual fund, it is SEBI. Market risk, it's very low in terms to FDs, moderate in terms to bonds, and moderate to high for debt mutual funds. Of course, investment amount in FDs, you can start with even 1,000 rupees. And when it comes to RD, which is basically recurring, you can start with 500 rupees. In bonds, you can start with 10,000, and with debt mutual funds, approximately 500 rupees. In terms of transparency, when we talk about FDs is a medium transparency. Bonds, of course, depends on the issuer, the which paper you're looking for. And debt mutual funds is NAV based, but it is transparent as shown on the particular exchange or the particular portal you're looking at. What makes SM REITs an attractive investment for you? Since it's SEBI regulated, so there's a confidence that it's been regulated by a particular blind company. Its rental is income visibility. As when we particularly look and invest into the particular product, you will come to know the cash flows of the product in advance. It's a low entry point in terms to the real estate segment, starting with just 10 lakh rupees. And the assets are professionally managed by the company hBits. Where do SM REITs fit in the fixed income mix? Well, as we see the comparison between bonds and other markets, we can clearly make out that FDs they get better yields than FDs. It's more stable than equities. It is basically a bridge between traditional real estate and fixed income. Well, the money which you're getting as a 8%, which I mentioned, paid out quarterly, which is basically tax free, and it is backed by real assets. What is the role of SEBI in SM REITs? SEBI formalized SM REITs as a regular product. It brings transparency, disclosure norms, and governance. Of course, it as well ensures investor protection and enables listing and trading of units of one of the exchange where the product is or the scheme is where listed. Could be NSE or BSE. Why it matters? Retail investors like you get an access to a trusted institutional grade A commercial real estate. Quarterly returns backed by SEBI REIT scheme. Well, how do we kind of measure this particular thing in terms to numbers? Adding in rental yield plus capital appreciation will turn out to 13 to 17% IRR. Of course, rental income is part of the IRR as well. Capital appreciation is over time, so I would always suggest the investors to be in this particular scheme for at least 3 to 5 years because we need to give time to the property to appreciate as well. The rentals will come to you on a quarterly basis, unlike bonds or debt mutual funds. Ideal for long-term income-focused portfolios. Well, a use case could be a 10 lakh rupee investment typically generates 18 to 22,000 per quarter indicated. Balance, diversify, earn. That's how we kind of like to say this because as we mentioned, it creates a bridge. Ideal for investors who want steady rental backed income, capital protection with long term potential, stability seeking investors wanting to diversify beyond equities, low volatility but real estate exposure regulated by SEBI. Well, just to let you know, whenever we look forward to diversify any kind of our investment portfolio, this should strongly be a part of your portfolio because though you might have purchased equities, you might have purchased different funds or kind of different asset classes. This should always be a part of it as it generates you and helps you to get passive income as well. Use case examples professionally building long term corpus, as the rentals will come quarterly, and whenever you exit, you'll get a property appreciation as well. Well, for HNIs and emerging affluent looking for alternate income sources, which is always a question that I've already bought bonds, we've already bought equities. So where should I? So this is a great asset class. Unlike, to give an example, if anyone is having, not everyone has got a value of let's say 10 or 20 crores to park in. This is the place where you park into asset class like property and earn in terms to rental income. Investors wanting asset-backed SEBI-regulated product. So this is a purely regulated product by SEBI, as well as people who planning for retirement income to or passive wealth creation. Think of SM REITs as owning a piece of commercial building and getting your share of the rent. In simple words, if I happen to say that, let's say in BKC there is a property and it has been rented out to some grade A MNC, the value could be let's say 300 crores. Let's say any property, any commercial property, A grade property, wherever the location you're based out of, specifically in the tier one cities, just owning a part of it by parking in 10 lakhs, it's a great thing to look at. Well, just to add in and put some numbers, what we have done so far as hBits, we have so far, erstwhile, we have done fractional ownership in which we successfully funded properties across cities were around 15. We have majorly all the particular assets, we are targeting 15% plus IRRs, of which, if you look at the two successful exited properties, one property which we mentioned on the brochure targeted IRR to be 15.54, and we delivered 17.54%. Another property which we just exited in June 2025, where the targeted IRR was 13.10 and we delivered 14.74%. Well, we are in looking at different spaces like MNCs, BFSI, healthcare. Uh, well, that is, of course, the projection where we're getting to get the tenants. Current portfolio of our tenants are like Microsoft, IIFL, Gupshup, ICICI, and the list goes on. We are only dealing with grade A properties with A grade tenants. As a study from CBRE report December 2025, how this new asset class is created and as people are looking forward to invest. So these are the actual numbers put in by this particular report. India's SM REITs are projected to touch $75 billion, backed by more than 500 million square feet of eligible offices, logistics, and real estate, retail assets. Well, I'll just ask in Samir to join in, and just we can just go to the Q&A round. Thank you, Samir, for joining us in this webinar. I know that you've been part of almost each and every webinar and uh, greatly taken an effort from Singapore and sometimes in New York and being part of and educating us all in regards to the particular product. We'll just step in and look at the particular questions.
Sure, thank you.
Okay, first of all, I jumped in the Q&A, but we have investors over here. So coming from the investor side, since you are a expert in equity, fixed income, and you've handled uh, being a managing director at different banks and looked at different verticals, you are I should say, an all-rounder. So, looking at that, if you could just give us a little bit about what global markets look like, and if you can just touch base a little bit on precious metals.
Of course. So firstly, good afternoon, everyone. And as Abhimanyu said, thank you. Thank you for joining on a Wednesday afternoon. Happy to be here. So first, looking at global markets, let's talk a bit about interest rates. The Federal Reserve, as we know, in December cut by 25 basis points. And there was a lack of clarity by the Fed on what they're going to be doing next year. The Fed Reserve Chairman indicated that probably Fed would cut by 25 basis points next year. But I do feel, given the soft jobs data which has been coming out in the US, I think the economy definitely is not, I wouldn't say slowing down, but growth definitely is not as good as we would expect. Uh, Also, the unemployment rate has ticked up to now 4.6%, which is the same as what was there in on the COVID times. So I do feel that the Fed will actually cut interest rate at least three times next year. And my expectation is 75 basis to 100 basis points cut next year by the Fed. If I come to India, I feel that the RBI will also cut rates here. Uh, Obviously, not as much given the pressure on the rupee, but I do feel the RBI could actually cut rates by 50 basis points total of next year. In terms of equity markets in the US, I do feel, and contrary to many people, what people might say, the AI trade is still on. I think the AI trade is here for at least the next few years, and I think that will continue to power the S&P going forward. I do expect a Santa rally. The Santa rally typically is the last week of December, where we see markets going up. So my estimate is that we could see a rally of 3 to 4%. And of course, in January when we do the webinar, we'll know whether I was right or wrong. And I'm happy to take it on the chin. But I do feel the rally from here will be a 3 to 5%. and December we should finish higher. Um, if I compare the Indian equity markets, I think Indian equity markets will continue to struggle. One is, of course, the rupees under pressure. Valuations are reasonably high. And though results are expected to be good, I think the PE ratios will continue to come down. So you might see the equity market struggle for the next 3 to 5 months before starting to go up. If I come to precious metals, obviously, given the uncertainty in the markets, given the tariff situation, both gold and silver has done extremely well. Gold this year, I think, is up almost 75%. Silver is up 125% because silver obviously has uses in a lot of industrial cases like solar panels and some of the other EVs. So I do think the rally which has happened, I think should start slowing down. I don't feel confident that we will continue to see this rally in precious metals. And people who are investors and who have gained should be now cautious buying at these levels. We've seen an amazing rally. I mean, this rally has not been seen in the past so many years. So I do see the rally actually slowing down quite a bit. So if you're a precious metals investor, be cautious around this time. Over to you, Abhimanyu.
Sure. Thank you, Samir. So, of course, the one first question is something which we are all looking at, but as we know that it's very close, but the question is from Mr. Mukesh ji. When are you launching the IPO?
So Mukherjee, I'll be very honest. We have been very keen to launch it quickly. As we speak, Mukherjee, we are very close to signing the term sheet. There's been a lot of back and forth, and that's taken a bit of time. We are hoping that if we sign the term sheet in the next week, 10 days, we should be launching the IPO in between end of Feb and March. But Mukherjee, we'll definitely keep you informed. We are also pretty excited about getting the IPOs to you.
Okay. So I have a question for Mr. Atul Jha. How liquid is this investment? How easy is to exit? And how can I check the current value of the property?
So liquidity, Atul Jha, is obviously given that it's a real estate investment. It's not as liquid as a mutual fund or as liquid as an equity. Though this is going to be traded on the NSE and the BSE. So liquidity definitely will be there, but obviously it will not be as liquid as a mutual fund. What we are trying to do, though, to help it becoming more liquid is to partner with brokers who can actually make markets in this and help on the liquidity. Is it easy to exit? Yes. I mean, you can definitely exit. I don't think that should be a problem. Unless you're talking about 20 crores or 30 crores or 40 crores of exit, you should definitely be able to exit because liquidity will be there, but may not be very high. To check the current value of the property, we will be doing a valuation of the property through one of the IPCs on a yearly basis. That's what SEBI has suggested. So that we'll be doing. So you'll know about that. And as you know, property prices don't change on a daily basis as such, unlike equities. So once a year, definitely we will be publishing the NAV, which will be published to the exchange where you can check it. Obviously, you can call us anytime to talk about how the commercial properties are doing, and we'll be happy to answer all your questions.
Great. So there's a question. How is it different from other REITs?
No, that's a great question. That's a great question. Now, let's talk about REITs. REITs typically give you a dividend income of around 6%. REITs typically will have 20% under construction assets. They will also have leverage. So they will typically take loans of around 45-50%. So they have to pay interest on that. And it's like a mutual fund where you do not have a right to say whether you want to invest in that in terms of the any property as such. They'll probably have 10, 12, 15 properties, and you'll be investing in that. In SM REIT, there are three, four different differences, I guess. One is, of course, the ticket size. SM REIT, the minimum ticket size is 10 lakhs. In REITs, it's much smaller, 3,000. We don't take any leverage. We are not planning to take any leverage on SM REITs. In REITs, of course, you can take leverage. Um, in REITs, related party transactions are allowed. So Embassy REIT can actually develop their properties and sell it to their own REIT. In SM REIT, no related party transactions are allowed. So which obviously protects the investor. The return which we plan to give is between 7.5% and 8.5% tax free to investors, whereas a REIT gives around 6%. And finally, I would say that we cannot do under construction assets, whereas REITs can actually do under construction up to 20%. So those are the major differences.
Great. Mr. Sisodia, of course, you are an investor. Currently, we get rental income monthly. Monthly, will it move to quarterly payment? If yes, sir, for you, since you are an existing investor, invested in fraction ownership, you will continue to get the monthly returns. Since I know you personally, that's why I just thought to answer this question. This particular is only for the SM REITs when we talk about for a new IPO plan. The question from SR with is explain about hBits REITs and other REITs we read in newspaper offer. So, Mr. Samir just answered this particular in comparison to what REITs, how is it different from REITs? Question from Mr. Rahul. How much percentage of AUM is an average in cash regularly? And how quickly are you able to deploy funds collected with new subscribers quarterly?
So, Rahul, the way this would work is we would be launching a SM REIT IPO and only then taking in the money. Till we launch the SM REIT IPO, we will not take any money from you. As soon as we launch it, the IPO typically will be open for 4 to 5 days. As soon as your money is received, we will transfer the property onto the SPV so that so I would say the wait time is maximum a week or so, and then you will start accruing the rental income, which then will be paid quarterly to you. So there is no real wait time as such. Just about a week before we actually take your money.
So I have a question from Mr. Sisodi again. Where and how can I access the details of capital appreciation of the investment? So when we talk about the new investment, which is coming as SM REITs, of course, Samir sir.
Sorry, AB, what are you saying? Sorry.
So it regards to the capital appreciation of the investment, the NAV values change at the end of the year.
Oh, absolutely. So we would be, as I mentioned, we would be taking valuation from some of the top IPCs like JLL or Cushman, and these would be given to the stock exchange. So and this will also be the NAV would also be listed on our website. So you'll be able to see how much your property is appreciated. And of course, because these units are going to trade on the exchange, so if you bought a unit at 100 rupees and it's trading at 101, you can always sell your unit at 101 in the market. So the market will also decide the appreciation of the investment, plus we will be giving the NAV to the exchange.
Question from Miladi. When can we expect the IPO? Well, sir.
As I mentioned earlier, between Feb and March is what we are looking for a SM REIT IPO. The size could be anything between 250 and 300 crores.
hBits returns you have shown in two places. Explain, but most, I guess, the returns which we are talking about, two parts is one is the rental income and another is the capital appreciation. Samir sir.
No, so in this case, I guess what we have shown in two places is the first part is what when we were making our own prospectus, what we thought we could give as IRR. But the sale, we actually achieved more than what we had actually estimated in both the cases. So in one case, I think it was 100 basis points more. In other cases, I think it was 13 and a half, and we actually did at 14.75. So the first column was where we thought we would the IRR which we would make, and the second column was what we actually achieved.
A question from Raju Bakshi. Hi, Bakshi sir. So we'll just have, I'll give you a call on this particular question particularly and update you on the development. Question for from Senior Vidhi. Coming out with IPO, it's very much surprise. Subco. Okay.
No,
So the question is, yeah. So of
so
course,
sir, firstly, this is not an IPO of the company. This is an IPO of a REIT. So it's very different, right? जो अभी companies के जैसे आ रहे हैं IPO मीशो का आया है, it's a IPO of the company. In this case, we will be doing REIT IPOs. जो हमारा IPO है, we will actually be doing probably in 3 to 4 years time. So it's not that our IPO. So that's not the case. But just how much AUM we have right now? We have around 500 crores.
so question: how frequent is the valuation done? Well, as Samir mentioned, every year we have to submit the valuation report from the IPC which we have, which is Knight Frank or JLL, which will be submitted to SEBI every year, and that's how the NAVs will change. Question from Mr. Bakshi, also regarding issuance of units in DMAT. Well, the trade will be happening through DMAT in the new format and will automatically reflect. So, Mr. Bakshi, if you are talking about the fraction ownership, if the units are coming, so we're going to be making the migration progress start post our first IPO of that particular units. Question from Masood Mewafrosh, what will be taxation?
No, that's a great question, Masood. So earlier on in the fractional ownership model, the rental income would be treated as income earlier on in the hands of the investor. And when you sold, you would pay capital gains. So in this case, Masood, what we've done, we've worked with Ernst and Young and come up with a very, very tax efficient structure. Uh, the way it would work is assume let's take the case that you get 8 rupees, you've invested 100, 8 rupees you get as rental income. And let's take the case of 5 years. So the 8 rupees which you will get, it will be treated as tax-free income for you. Why is that? Because we will show it as return of capital. So in after year one, your capital in your books will reduce from 100 to 92. In 5 years' time, your capital would have reduced from 100 to 60. Basically, 8 times 5, 40, would be reduced from your capital. So you would have received 40 rupees effectively as tax-free income every quarter, right? So you could invest it in, you could do an SIP with that. You could invest the same in other SM REITs. So you could do pretty much anything. So you have deferred, in a way, deferred tax, right? Uh, Suppose at the end of fifth year, you decide to sell your units, or we decide to sell the SPV or the property. Assuming the price in 5 years' time says 125, your long-term capital gain will be the difference between 125 and the reduced capital, which is 60. So the 65 then will become capital gain for which you will pay 12.5%. So what it does is defers taxation, and you then pay taxation at a much lower rate because capital gains tax long term is only 12.5%. So that's the taxation. We have a Ernst and E&Y note, which if you want, you can talk to your salespeople or you can talk to Abhimanyu, who can give it to you.
Great. So for everybody's benefit, or since we'll not be aware where to send, you have the spelling of my name mentioned in the particular webinar. That's on the top. ABIMANYO @hbits.co. You can just drop in an email and with the subject line tax note, and I'll send you the tax note to you. Question from Mr. Girish Palarpura. Have you identified the property? Yes, we
Uh,
have.
gi- yeah,
Please.
please, Abhimanyu, please go ahead.
Yeah, so yes, we have indeed. Just to put in a number to it, we already have a pipeline of close to 2,500 crores, of which we are looking between Mumbai and Bangalore. We should finalize and close it ASAP. Question from Talia, Mr. Dr. K. Malamal. How do we get communications about our investment after buying IPO?
So, firstly, obviously, it's listed on the exchange. So the pricing you will get on a daily basis on the exchange. Secondly, we have our own WhatsApp communication channel. Please join that. We also have our own YouTube channel. So we'll be giving updates about all the properties, not only on our website, but on our WhatsApp channels. We'll also be communicating to you about how the commercial real estate market is doing. Plus, we have blogs which are regularly updated. So there'll be a lot of information which is going to be given on our website, on our WhatsApp channels, on our YouTube channels, and we'll make sure, Dr. Mamalan, that all the information you need is available to you.
Uh, Sodhya, thank you. Mr. Jagdish question is, my investment is diversified into multiple projects or one project?
I guess, Jagdish, once we come out with an SM REIT IPO, it's that one project. If you buy that IPO, you are investing in. It may have multiple tenants, but it is one project. Now, if you have to invest 1 crore, you may decide I'll do only 20 lakhs in one project, and 20 lakhs I might do in some other project. So you could actually diversify by putting in money into different projects. I hope that answers the question.
So just to add, so every scheme and every IPO is a different project. So that's just to follow that. Okay. Yeah, I know. So we just got no, well, just kidding. Thanks for taking questions for me. Very much, sir. Question from Dr. K. Malamal. How much time interval between release one IPO to another IPO?
I guess, Dr. Mamalan, the first IPO is taking a bit of time, given that we got registration on 1st of April. We had to make sure all the compliances are there, because SEBI obviously requires certain things to be done before you can do an IPO. So that's why it's taking time. But the second IPO, my guess is it should be coming every few months. So in a year's time, we could be coming with 6 to 7 IPOs. And we are looking at sizes of anything between 1,200 and 1,500 crores.
Question, how are margins being worked out between hBits and investors? What is REITs IPO? Will you not take further funds after the initial IPO amount?
Yeah, so the margins between hBits and investors, this will be clearly mentioned in the DRHP, which will be filed with SEBI. The draft red herring will have all the details of the fees we are charging, the expenses, pretty much everything. So investors will know exactly what's happening. The asset management fees which we'll be charging, that will also be clearly mentioned, and it's going to be very, very transparent. As in a IPO, once the SM REIT IPO is listed, one scheme is listed, then if you need to invest money, you will have to do it in the next SM REIT IPO. What SEBI has mentioned, that every building we do, or every, say, 400 crores or 300 crores, whatever that amount is, it has to be a new IPO. So the trust which will be registered will be the same. The scheme will be different. So every scheme will have different buildings or different strata, whatever. And the sizes could be different. So one could be 300 crores, one could be 500 crores. So far, it cannot be more than 500 crores. So it's always going to be less. So every scheme will be there. So our trust will have scheme 1, scheme 2, scheme 3, scheme 4. And you are then allowed to invest in every scheme. You can either do it at the time of the IPO, or you could do it in a secondary manner by buying it from the exchange.
Question from Nafis Khan. Hi, sir. Very good afternoon. We are over existing investor. Is the taxation same for NRIs? Yes. And I'll just, after this webinar, share that ANY note with you since I have your number and email ID. The next question is from Priyanka Goel. Can you please repeat the email? Yes, sure. It's B for Bombay, I for India, MAANYO, as mentioned on the screen, @hbits ending with an S.co. Question from Dr. K. Marmal. Please elaborate little about reduction of capital.
Sure, Mr. Ramalan. You can treat rental income as in various ways, right? The REITs treat them as partly dividend and partly interest income. We have decided that the most tax efficient way of treating this is to make it to reduce the capital so that there is no tax. So what does that actually mean? You've paid 100 rupees. Either I can pay you interest, or I can say, you know what, I won't pay the interest now. I will pay the interest later, but I will pay the capital first. So I pay you that 8 rupees, which you then reduce from your capital. So your capital keeps going down. Your rental income remains the same, but your capital keeps going down. So in 5 years' time, if it's 8 rupees is your capital reduction every year, after 5 years, your capital reduction comes down from 100 to 60. And when you sell that property, either we sell the property or you sell your units, the difference between your capital at that point in time and the sale of the units is the capital gains you pay. So it's very, very clear. And in that ENY note, which Abhimanyu can share, it will be very, very clearly given. And on the mail ID, my suggestion is, Abhimanyu, can you type your mail ID on the Q&A so that everyone can see it?
Sure.
Because it's kind of complex.
Yeah, I'll just.
Why don't you type it and I'll start taking the questions.
Sure.
A question from Girish: what is the minimum investment value in IPO? Girish, the minimum is 10 lakhs. But you and if any single investor cannot have more than 25% of the IPO. So if it's a 100 rupee IPO, maximum you can invest is 25, and the minimum, as I said, is 10 lakhs for every investor. So Ashish Kumar Deep, in case a major tenant like Teleperformance or a London-listed MNC exits early, what safeguards exist to protect investor cash flow? Do you maintain reserve funds or have releasing guarantees? So Ashish, this is one risk, I guess, which every landlord takes. When a tenant leaves, we obviously as asset managers try to find a tenant very, very quickly. We also try to see that if the property is under rented, so we can get the best rent. But there are no guarantees as such. I'll be very honest, and we don't take reserve funds earlier because obviously we want to keep the reserve funds. We want to keep your funds with you. So we will not really take any reserve funds as such. So that is one. I guess that is one risk, which I guess everyone needs to take, and I want to be very open about that. There's another question by Nafis: is the capital gains calculated on the initial investment amount or the remaining amount after paying the rental limit? It's Nafis. It's after paying the remaining amount after paying the rental. So if it's 100 initially. After 5 years, if I paid you 8, it's going to be 60. So it's going to be the difference between 60 and your sale price. Question from Niladri: what is the capital appreciation I can expect? So Nilabri, typically we have a rent escalation of 5% per annum or 15% after 3 years. That's typically the rent escalation. So my guess is this plus the rental income and slightly more is what I would expect. It's That's why we give a broad range of anything between 13 and 17% total IRR. So capital appreciation of I would say 5 to 8 or 5 to 9%. Question from Priyanka: what is the risk factor as an investor? Priyanka, I guess the major risk is the tenancy risk. Though we try to protect our tenants as much as possible, I mean there is a chance that a tenant wants to downsize, so he has to leave, or they're consolidating somewhere, they have to leave. We try to mitigate that risk by having long-term leases, but in India, having long-term leases is a problem because the government does not. There are a lot of things. Which you can't do because the government does not allow that. So we try to do that. We try to talk to lessees also to make sure that the lessees are there for the long haul. But sometimes we can't control it. So that's, I would say, the only real risk as such for an investors. So what are the risk factors one has to be mentally prepared as an investor, Priyanka? That's, I would say, one of the main risk factors. AB, you want to take the next one?
Yeah, so I was actually trying to, yes. Question from Mr. Akash Kumar Deep. Out of all hBits properties, how many have matched or exceeded the projected IRR and how many have underperformed? To my side, being the first employee, I've seen all the properties. As of now, we have done 2 exits and we have successfully exited them, as mentioned in the presentation numbers. One property which we exited in second, which first one, the targeted I was 15.54 and we exited at 17.54. One which we exited now, the target was 13.10 and we delivered 14.74. Looking at the current numbers and how the rentals are flowing in and how we have acquired the asset. So there are two things to it, just for knowledge and investment purposes. The ROA is one particular factor one should truly look at. We particularly look at one more important factor, which is basically the entry price point. Entry price point turns out to be one of the most important factors because at the time of the exit, that plays in the role of the IRR. So that's how it looks at. Question from Dr. K. Malamal. Can we expect top-up facility in the same scheme already invested? No, sir, that is not there at this moment, as since it is under the SEBI guidelines. But if there is any kind of a change, all the cash flows will be shown in the DRHP format in advance.
No, and I guess, Dr. Mamalan, just to add, you cannot have a top-up facility in the same scheme because the property has already been bought and registered. And the property does not need more money. Yes, what you can do is you can always go and buy the units in the market, which is like a top-up, right? If it's trading at 100, but you have to pay the market price at that point. So you can go, it will be traded in the market and you just put in your bid and you buy it in the market, which is effectively the same.
Questions? So returns can differ from IPO to IPO and will depend on specific projects that IPO is. Yes, correct. Perfectly right, sir. Question from Mr. Yogesh Pathak, since you are an existing investor, sir. How much rental is expected on 10 lakh investment? Well, you can just directly calculate what is the value of investment, this for everyone. Multiply that by 8% and divide that by 4. That will be your quarterly payout coming to the account every quarter. A question from Mr. Narendra Mane. Hello, I'm joining now. It's too early in US. So question is SM REITs IPO thing same as fraction investment, which has minimum size to 10 lakhs? So it's a bit different. What's the difference between the two? Okay. How many SEBI SMEs regulated there are? How is it different from for NRI? Only so, Samir sir, I guess they have questions.
Yeah, I got this. So the erstwhile fractional, what we used to do, fractional investment, Narendraji, mainly was unregulated. So that was unregulated. The SM REIT is regulated by SEBI. So far, two SM REITs have been done by PropShare, total size of 800 crores. That's been done. What's the difference between the two? SM REIT minimum ticket size 10 lakhs. Earlier fractional investment size minimum ticket size was 25 lakhs. SM REIT is listed on the exchange. Fractional was not listed on the exchange. Very tax efficient structure, SM REIT. All rental income is tax free and is shown as return of capital. In the fractional piece, you would pay the rental income as you would be paying tax on your income. So very different. Minimum ticket size 10 lakhs, and as I mentioned, fractional was 25 lakhs. Is it different for NRIs? No, similar to what it was earlier. In SM REIT, we would be paying quarterly, initially at least, mainly to get used to the system, make sure that the processes are in place. Earlier fractional, we would pay monthly. We have pretty much all the information, Narendra, on SM REIT. So any information you need, Abhimanyu will be happy to give you. Also, if you go onto our website, hbits.co, we have a lot of information on that. We have a lot of information on blogs. We have also AI answering all your questions if necessary. So please have a look at our website and go on that. That should answer pretty much all your questions. And yes, we take your point. We'll try and do it as per US timing also.
Question from Mr. Rajesh Shah. Buying units in from secondary market will be in a multiple of 10 lakhs or number of units of your choice. Everything, be it you buy it directly in the first round or from the secondary market, it's going to be in the multiple of 10 lakhs since one unit is equal to 10 lakh rupees. How much? Are all the property already leased? Yes, sir. We are only dealing into pre-leased commercial properties which are already leased out in advance. Another question for investors in the zero tax bracket, like non-working family members, the return of capital model actually results in lower overall returns compared to the previous direct rental payout method for amounts invested less than about 1.5 crores. Sir, me, sir, I can answer this, but yeah.
Yeah, please go ahead.
So, if I look as a comparison in terms to the erstwhile fractional ownership and now, talking about, let's say, a zero tax bracket earner, we used to submit since earlier it was a CCD, you getting income in the form of interest income. But if you were going to submit the 15G or H form, it was a zero tax charge to you. In the similar format right now, if we are, there's no requirement of submitting the 15G form. It's going to be the part of just getting a tax-free income in the earlier part. That is right from your statement because we are deferring a tax and moving it further to the LTCG, which is 12.5%. Generally, what I have seen in this particular category, indeed, it should be taken as an opportunity. People who are earning at the 30%, they generally pick up the investment under the HUF name or could be any other name in the family member and then taking this particular investment. Well, this investment gets opened up. Even you, as a 30% or a 40% tax bracket, can get in this investment and look forward for more investment in a zero tax bracket from the other places. Yes, there'll be a slight difference between both the factors, and we can surely, looking at this case study, I guess, Ramisa, I'll create a particular Excel sheet as a comparison on this.
Sure.
Okay, Mr. Omkar Kulkarni, in which platform do we trade this SM REIT? So it will be listed in either of the two, NSE or BSE, which we'll come to and share with you in advance, for sure. Attending, why are the returns quarterly and not monthly? Samir, sir.
Yeah, the main reason for this is, initially we want to make sure that the processes are right. Given that it's going to be listed on the exchange, given that we want the returns to be paid on time, that's the main reason. I guess as the product matures, it's quite possible that we may move from quarterly to monthly.
Yes. Question from Nafisa, what happens when HBITS exits an investment?
So the way it would work, Nafis, is that we would sell the SPV to a buyer, and we would unlist the scheme from the exchange and return the money to all the investors who are holding the units at that point in time.
Question from Priyanka. Priyanka, regarding this question, since you are aware of my email ID, you can just text me and I can just send you my contact number and we can discuss on this particular how to discuss with further people. More than glad to answer this. Question from Rahul. If you're not keeping any reserves, any major property maintenance work, how it will be funded?
So Rahul, we keep some reserves, but we don't take too many reserves, because what then happens if you're taking upfront a lot of the reserves, then the rental income of the investor also has to go down. So either we take it upfront or we take it later. So any major maintenance work which comes, and so far fortunately we've been fortunate it hasn't come, we will then take it, either ask the investors to give at that point in time or reduce it from the rental, because we'll be the asset managers. I mean, taking it upfront without really knowing what the maintenance work we feel is not in the best interest of our investors.
Questions. Rental will fall into income from other sources in income tax. Well, sir, you can just drop me an email and I can share that email now and you will come to know about the source over there. This is just received a few minutes back, so I'm more than glad to share this particular invite note with you. And we make it a point that in the next webinar, which is going to be happening on the, I guess, 15th or the 18th, which is a Thursday of that particular week, we will talk about the ENY note in detail. Question from Mr. D'Souza. How do exit mechanisms in SM REITs change in traditionally illiquidity premium of commercial real estate? And at what point does diversification across SM REITs stop reducing risk and start diluting returns? Sure.
Um, Typically, exiting commercial real estate, especially if you bought a whole property, right, 5 or 10 crores, obviously it takes a bit of time. In this case, uh, uh, obviously, given that property here, firstly, one thing you'll be doing is you'll be investing a small amount, right? It will be diversification of your overall portfolio. So assuming you have a portfolio of 1 crore and you decide, I want to invest 15% or say 20% of my portfolio in an asset class where I'm fairly comfortable that it's backed by a real asset, and where the income is annuity income I get, and I'm fairly confident about the cash flows. So, if you're an equities investor, obviously the volatility is much higher, right? If you see the VIX, it's at 16%, whereas the vol of a lot of these assets are much lower. Where I guess you start getting diminishing returns, I would say, is firstly, if you ever feel that the equity markets, and you are happy to take that risk reward, and that equity markets will continue to do well, and if you have a very strong view, then yes, you can decide that I don't want to diversify that much, because I think this will start diluting my returns, and I would rather go all into equities. Where I think it adds a lot of value is when you see, or when you have a very strong view that equity markets in the future are not going to do well, or where you feel interest rates are actually going to come down. That's where the value of this in your overall portfolio actually becomes quite good. So to reiterate, it's your risk appetite. It's if you want to go all in equities, the risks are much higher, because there is no real floor as such in equities, right? Here there is a very clear floor on the principal, and the only thing which is really at risk is your is the income which you actually get. So my stance on a lot of these alternative products, and especially SM REIT, since it's a new asset class, is to have at least 15 to 25%, depending on your risk appetite in these products. Now, if you are a retiree, or if you have say only 20-25% in equity, then a larger chunk can be allocated to this kind of asset class.
Question from Mr. Ashish Kumar Deep. Under the SM REIT framework, what kind of a mandatory reporting will investors receive? Quarterly rent roll, occupancy rates, lease expiry schedule, tenant credit quality, and will it be accessible through DMAT/brokerage platforms?
So all this information, Ashish, will be available to you. Pretty much everything. It will be. I'm not sure whether it will be available through brokerage platforms as such, but it will definitely be available on our platform. It will definitely be available on our hbits.co. It will be available on our blogs, pretty much everything. So definitely on our platform, it will be available. It might also be available with the merchant bankers. Maybe not available brokerage platforms. I'm not sure yet. But as and when we launch, we'll be happy to let you know around that also.
Question from Mr. Thomas George. Will you be sharing the PPT of the benefit of late attendees? Well, sir, first of all, recording of this webinar will be available on our YouTube channel, I guess, by Friday or maximum by Monday, number one. Number two, we'll make it a point that the recording link is shared with you over the email. Second question, following question is from Dr. K. Malamal. Any special features available for women investors in the schemes? Well, let's see, sir. As of now, I don't see anything as of now, but we love to do always such kind of a scheme thing. But if it is allowed in the purview of SEBI only, sir. Question from Priyanka Goel. Can we see the previous listed project that hBits have exited? Yes. So, Priyanka, when we have a call, I can just take you through what the exit, how it happened, and what were the projects looking like. Yogesh Pathak, sir, do we need to property tax also? Yes. Asset, when it's a real estate, property tax is always a component of a real estate investment. Well, when you look at the signing of this particular investment, the cash flow, which you will see in advance before parking in the money, that cash flow statement will have property tax. So after deduction, you can see that particular returns as well. Question from Rajesh Shah. Is there any chance? Yes, sir. Mr. Shah, you can always reach out to me or to your, please sign up at hbits.co and you'll be having an investment manager lined up to you and you can take it forward from there, sir. Question from Shahnawaz Malik. Can I invest for my mother, sister from my account and get her account for return? Well, sir, just to let you know, you have to invest through the DMAT. And generally, what I see that your DMAT holding is as per a particular name, right? So if it is as per Shahnawaz Malik, if you're investing from your name in your DMAT, the units will be given to your DMAT account. So I guess that will be, which you need to check with your broker how it is going to be managed, or you have to open a couple of new DMAT accounts over there. Question from Rahul N. Will there be capital gain at two times, once when individual exits and other when complete SPV exit? Samir, sir.
No, answer Rahul is no. There will be only capital gains at your side, which you will actually have to pay, not at the SPV
level. Question from Mr. Sandeep T. What happens in extreme cases when you are unable to find an exit? How do you handle investors' exit in this case?
So, Sandeep, the exits will happen in two ways, right? One is I can sell the property to a fund. Once I sell the property, I can sell the SPV. So that's one way. Otherwise, is investors see, because this is effectively perpetual capital. I am not forced to exit the property at all. This is not a fund, right? It's a listed IPO. I don't need to delist the IPO. It can continue forever if I want. Now, if an investor wants to exit, he can always sell his units on the exchange. Now, if your question is what happens if this cannot be done for whatever reason, either there's no liquidity, we'll be tying up with brokers to make sure that liquidity is available to investors like you.
Uh, Question from Narendra Mane. I have some confusion. Let's say Edwin gets semi-approved SMEs. I invest 20 lakhs, two tickets into it. HBITS SPV role here. Uh, then after the let's say IPO is published for that REIT, after that we can still invest in IPO. How long IPO exists until property is entered?
So the
What do you
way,
think?
Narendra, it would work is we would launch an SM REIT IPO. You would subscribe to the IPO. Suppose you put in 20 lakhs. So you subscribe to the IPO. The SPV will be buying the property, right? The property from the seller will be transferred into the SPV. That is the role of the SPV. The SPV is a private limited company which will be formed for this and which will actually hold the asset or the property there. Once suppose we've assigned the units to you, then you will start getting the rental from the property. So the IPO, you've already invested in the IPO, so that's pretty much done. If you now want to buy more units, then you'll have to go into the exchange and buy actually more units. I hope, Narendra, that clarifies.
Perfect. So we have our last question from Mr. D'Souza. How predictable are SM REITs exits really? And what early signals indicate a good versus forced exit?
So, Alston, I guess it's early days, given the fact that only two SM REITs have been launched. Uh, uh, Initially, the liquidity is quite a bit from what I've seen, and then over time, liquidity becomes lower. What is a forced exit is when you see people selling below par, where people are just selling because they just need the money for whatever reason. We've always mentioned that when you invest in SM REIT IPOs, you should try to keep it for at least 2 to 3 years. So that's when you'll get the maximum IRR. A good exit is obviously you buy it at par. Tomorrow it goes at 102, 103, 104. And property will not appreciate in 3 days, right? So if it goes to 104, I mean, you may decide to actually exit it and then buy it again when it goes to say 99 or par. So that's what it really is. We see less volatility in this product as compared to equities, much less. And over time, as it matures, we do think that this will appreciate in a very gradual manner, where in a year's time you might see a 7 to 10% appreciation.
Question from Mr. Omkar Kulkarni. This came in at the last minute. Suppose for a property IPO price of let's say 1,000, I invest 100 rupees, and after 5 years, say 40, would be repaid as return on capital. So, so you say that sell the property after 5 years. Does that mean I am only a 6% shareholder of the property instead of 10%?
No, you will hold the same percentage because the return of capital will be for everyone who's holding that. So as a percentage, you'll be holding the same. So the rental income which you'll be receiving will be exactly the same.
Great. So again, I'd like to thank Samir for being part of this presentation. Great input received in terms of the global market and, of course, on the special metals. And now we have SM REITs and we are working very aggressively to get our first IPO. And we are looking forward to sign up the term sheet very soon. We will be more than glad to share the first news to you and everyone. Uh, my only suggestion over here would be in regards to please follow us on LinkedIn, be a part of our YouTube channel, and as well as the WhatsApp channel. It gives us regular updates and information like this. Like for a matter of fact, the ENY tax total will be published over there. So it's automatically going to be shared with each and everyone. Wishing you all a very happy new year in advance, a very Merry Christmas, since it's going to be the last webinar in this particular month. And wish you all a very happy new year again. Thank you very much.
Thank you so much. Have a great evening. Thank you.